Well guys, here today I just put $17,000 into a stock that I like very, very much. Let's put it that way, okay? As I told you guys in the video I released, a day or two ago, I basically said in that video, there's about 5 to 10 value stocks out there that I absolutely love right now, okay? Not growth stocks, I'm talking value stocks. Either turnaround plays or stocks that have been heavily beaten down and aren't like super popular stocks that are known out there by everybody, but the valuations are just too dang compelling. And guess what? This stock is one of those stocks I mentioned in that video, okay? And I would say this, I almost want to call this stock an easy money stock. So what stock is this? It is Foot Locker stock, okay?
Should you buy the dip on Foot Locker stock? As Jeremy Financial Education picked FL stock for his dividends only account.
So that was over $17,000 here today I bought worth of Foot Locker stock. That is those shares in that particular account there, 585 shares at a $29.17 cost basis there. So all in total, we own over $50,000 worth of Foot Locker shares as of right now, okay?
In financial education, Jeremy's 6 stock that I'm buying, July video, August video, and plenty other videos. Jeremy has been pumping Foot Locker stock. Ticker symbol FL.
Foot Locker. FL, okay? About 145 shares here today, paid $25 and some change for those. That was a little less than a $4,000 move there, right? It's a 6% plus dividend yield on this baby, which is absolutely massive. I mean, just an insane dividend yield on this one. Mary Dillon leads the company, obviously. Is a value stock, dividend stock, with a little twist of it. It's also a turnaround play. And that is Foot Locker stock. This one's had a horrible past 5 years. The stock's down 46% in the past 5 years. Awful, okay? But I'm here to say I'm a huge believer in this Foot Locker story, and I am actively buying shares right now, and I'm probably not going to stop buying this one anytime soon, okay? Foot Locker stock. It is a value and dividend play, okay? Not a huge amount of risk. It's kind of been de-risked on the price side now at this point in time.
He even called Foot Locker his easy money stock.
7 easy money stocks to buy now. Oh, if my mom called me and she said, Jeremy, I want to buy 7 stocks. I can't touch the money for the next 4 years. What 7 stocks am I buying? That's an easy money stock has 5 core things, in my opinion, that it has to have. Okay, one is a great capital position. Got to be in a very strong capital position. I have 7 up here. This is actually a tie. I put 2 companies in here from the 6th spot because they're actually somewhat similar. They're both retailers. One is Foot Locker, which obviously sells not just shoes, but clothing. I spent $300+ at Foot Locker this past weekend, so Foot Locker shareholders say thank you, okay?
Do I think that Foot Locker is an easy money stock? Why investors are cautious and sold down on Foot Locker ahead of earnings. Do I think Foot Locker has a moat? What's the margin of safety price on FL stock? It's not based on how far a stock has fallen from their all-time high, like Jeremy talks about. Why does Mary Dillon reject Kanye West's Eazzy shoes during Adidas's relaunch of the brand this summer? I will explain it all right after this.
How you like that?
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? Analysts warned that soft Nike sales, a weakened consumer base, and a general lack of compelling product including the absence of Eazzy sneakers, will likely play a role in challenging results for the Foot Locker in Q2. Foot Locker's struggles are continuing and appear to be worsening, said Williams analyst Sam Poser to investors. While Foot Locker in March said it was revitalizing its partnership with Nike, analysts cited reduced allocations from the swoosh as a potential headwind to overall sales. Poser was also skeptical about potential progress in Foot Locker's Lace Up plan, a multi-pronged strategy it rolled out in March to help it increase market share and grow sales to $9.5 billion by 2026. This strategy hinges on Foot Locker diversifying its brand portfolio, relaunching the Foot Locker brand with new store formats focused on an off-male presence, maximizing its loyalty program, and investing in technology to enhance the customer journey. In its first quarter results reported in May, Foot Locker sales declined due to foreign exchange rate fluctuations and a general tough macroeconomic backdrop, CEO Mary Dillon said. As a result of the miss, Foot Locker reduced its full-time guidance as it implements markdowns and promotions to clear through inventory and drive demand. For the second quarter, Foot Locker said it expects comps to be down high single digits, below its prior outlook of down to mid-single digits. Foot Locker is also facing headwinds from its decision to stop selling Eazzy products last October in light of brand founder Kanye West's anti-Semitic statements. While other retailers have started to sell the brand again for current drops, Foot Locker appears to have stayed away. I think that's a mistake on Mary's decision. Kanye West said Foot Locker pulls my remaining stock from shelves. Kanye West won't be teaming with Foot Locker anytime soon, as the footwear chain has reportedly rejected a restock of Eazzy brand. Foot Locker said Foot Locker does not tolerate any form of anti-Semitism or hateful and discriminatory behavior. While we remain a partner with Adidas and carry a wide assortment of their collections, we will not be supporting any future Eazzy product drops, and we have instructed our retail operators to pull any existing products from our shelves and digital sites. However, other footwear branches like Snipes and Finish Line announced that they would be still selling Yeezys. Isn't this just like stacking a bunch of money and lighting it on fire? Adidas cut ties with Kanye following his tirades, and the apparel giant's business severely suffered. Adidas later on agreed to bring Yeezys back in February, and its decision to sell stock of pre-existing designs is paying dividends. The German sports giant's recent sell-off of Yeezys gave the brand a boost by 85% in quarter 2 of 2023. It appears as though Foot Locker is sticking to its guns about cutting ties with Adidas's Yeezy sub-brand. So it appears that Foot Locker will not receive the modest bump in sales and gross margin that some investors had speculated they'd get from participating in this summer's Yeezy releases. Despite this sounding like an impressive number, Adidas is still posting a loss for the second quarter, with more than $491 million in losses for the brand. However, Yeezy shoe sales, which have jumped up due to huge demand for the product, saved Adidas from a much larger initial loss of $764 million. We are happy with the way the second quarter developed, said Adidas CEO. The core Adidas business was slightly better than we expected. The sale of the first part of the Eazzy inventory did, of course, help both our top and bottom line in the quarter. Yeezys are still a huge moneymaker for the stronger rapper. In June, Ye reportedly pocketed $25 million from Adidas in just 24 hours after leftover Yeezy stock from the pair's dysfunctional partnership flew off the shelves. Kanye West claimed that over 682,300 pairs of Yeezy sneakers were purchased, which would allegedly equate to a $25 million payday for Kanye West. BTIG analyst Janine Stitcher said, Foot Locker could also see a negative impact when student loan payments resume in the fall and impacted consumers find themselves with less available cash on hand for discretionary purchases like sneakers. Foot Locker's customer base has the potential to be negatively impacted by student loan repayments given its younger demographic and the discretionary nature of its footwear assortment, which skews towards fashion or sneakerheads. Stitcher said that 66% of Foot Locker's consumer base is under 34, with most between the ages of 25 and 34. Yes, if you have recently bought a nice pair of shoes as a guy, are you more likely to buy more shoes in 6 months? Unless you are an addict for sneakers, you probably won't need to spend that $100. That's why in the time where gas price is high, treasury yield is sky high, a dividend stock like Foot Locker is not a good place to be. Sure, you getting that 6% dividend, but when the stock price is down 10 to 20% from where you bought it, you're still in the red. As for Foot Locker's moat, gross margin is low 30%, meaning it doesn't have a moat. Sure, it have scale, but it's a retail business. It doesn't have high barrier of entry, meaning people with money can easily replicate with a better brand name. Because Foot Locker don't have its own brand name shoes, its profit margin will always be limited. Right now, it's below 3%. Balance sheet, it has $300 million in cash, but $3 billion in debt. Not good. If they use all their cash to pay its debt, they would have net cash of negative $2.8 billion. Foot Locker has been free cash flow positive since 2015. However, in recent quarters, its free cash flow has turned negative. Free cash flow yield is at negative 7%. That's not good, especially in this market. Before this year, Foot Locker has been generating around $500 million in free cash flow annually. So if there's no recession, this business can generate $5 billion in 10 years. Now, Foot Locker has $3.1 billion of debt, and it's valued at $2.2 billion. So it seems to me now it's traded close to a fair value. However, in recession times, its free cash flow goes negative, which absolutely will drag down its fair value of the company and stock price. If you want 50% margin of safety price for Foot Locker, that would be around $13 a share. If they had to hire Mary Dillon to fix this company, it might be some problems to fix. Warren Buffett said, buy companies that could run itself or any idiot can run, not the company that requires a star CEO to fix. What do you think? Do you think Mary is wise to reject Kanye West? Are you planning on buying the dip on Foot Locker stock like Jeremy Financial Education did? Let me know in the comments below. You are such a good boy for watching my video right till the end. Bye.